All right, strap in because we are diving right into, well, a pretty wild week in the markets. We got a lot to unpack today.
Yeah, it looks like we've got a little bit of everything this time, from AI chips to even Apple making a comeback in China.
You know me, I love a good tech story. So let's
Yeah.
jump right into it, starting with TSMC. Their earnings report, I mean, it practically broke the internet. Stocks soaring. Their CEO is predicting AI server revenue to triple by next year. What is going on? What's driving this AI gold rush?
It's all about demand, really. And not just any demand. We're talking massive demand from the big players, the Googles, the Microsofts, the Amazons of the world. Remember all those capital expenditures we've been talking about?
Yeah, those are huge.
Well, a big chunk of that money is going straight to TSMC. They're the ones making the chips that are essentially the brains behind this whole AI boom. And you know what's really interesting? TSMC actually highlighted how they're using AI themselves to make their own production more efficient. Talk about putting your money where your mouth is.
Right. It shows how much they believe in it. I mean, they're betting their own business on it. But what about all this talk about a semiconductor slump? ASML, another big player of the chip-making world, they just had a pretty dismal earnings report.
Mm.
So what gives? How does that make sense?
Good point. This is where it gets interesting. See, ASML, they're involved in a wider range of chips, right? Including some older tech. But TSMC, they're laser focused on the cutting edge stuff, the chips that are specifically designed for AI. It's like imagine a bicycle factory versus a Tesla gigafactory.
Okay, I see where you're going with this.
Both make vehicles, right? But they're in totally different races.
Makes sense. So while everyone else is struggling to keep up, TSMC is basically sitting pretty.
Basically. And it's not just their current technology that's got everyone excited either. They specifically said that the demand for their upcoming 2-nanometer process, which is even more powerful than the 3-nanometer tech in the latest iPhones and AI platforms, of course that demand is, quote, enormous. They actually use that word, enormous.
So I guess that explains why their CEO is so optimistic. But let's bring this back down to earth for a moment. What does this TSMC dominance actually mean for the everyday investor, someone like you or me?
It's a huge signal. Really, think of it as a big flashing neon sign. Forget trying to time the overall semiconductor market. That's a fool's errand. This is about understanding where the real growth is, and right now, that growth is in AI. TSMC's success is basically a guarantee that AI investment is only going to accelerate. So if you're invested in tech, you've really got to ask yourself, how do I get a piece of that AI pie?
Ride the AI wave and forget about trying to time the broader semiconductor trends.
Got it. Speaking of riding waves, Apple's having quite the moment over in China. Seems like those iPhone 16s are flying off the shelves.
Yeah, they're killing it over there. The iPhone 16 launch was a huge success, seems to be driving a real resurgence for Apple in the Chinese market. It really is a turnaround story when you think about it.
Hmm.
Last year, everyone was worried about a tech Cold War, US and China, how it would completely derail Apple. And now, they're scooping up market share left and right. What happened?
It's a combination of things. Yeah, the iPhone 16 is a hot commodity, no doubt, but it's also about Apple's, I guess you could call it their long game in China. They've built up a lot of loyalty over the years, consistently delivering great products and services. And, Chinese consumers, they remember that.
So it's not just about the shiny new thing, it's about building trust, playing the long game.
Exactly. But there's another piece to this puzzle. What about the competition?
Right, haven't Chinese brands like Huawei been giving Apple a run for their money?
They have, but here's the thing. Huawei is still feeling the heat from those US sanctions. Their latest phone, it just can't keep up with the tech in the iPhone 16, especially when it comes to AI. And that's given Apple a real opening to regain some of that lost market share.
So it sounds like Apple's firing on all cylinders in China. But how big of an impact are we really talking here?
Well, get this. One analyst who just got back from Asia said they expect Apple to grab an extra 100 to 150 basis points of market share in China just this year.
Wait, 100 to 150 basis points in a single year. Okay, for those of us who don't have market share memorized, remind us what a basis point is again.
Sure, think of a basis point like a tiny slice of a percentage. 1 basis point equals 0.01%. So 100 basis points would be a full 1%.
So basically, Apple's about to take a giant bite out of the Chinese smartphone market. We're talking potentially millions of new customers.
Potentially, yeah. And it shows you, despite all the political drama, all this talk about decoupling, the demand for those top-tier tech products, especially in a massive market like China, that demand can be a powerful, powerful force.
It really makes you realize how interconnected everything is. Geopolitics, consumer demand, technological innovation. It's all part of the same big, messy, fascinating puzzle. But let's not forget about the consumer. They hold a lot of power in this equation, as we've seen.
Absolutely. And speaking of the power of the consumer, did you see what's going on with Netflix? Talk about a plot twist.
Oh, you mean their surprise victory in the streaming wars? Cracking down on password sharing. It's like they discovered a secret weapon or something.
It was a bold move, for sure. You know how many people were skeptical? They were practically waving tiny violins for Netflix, predicting a mass exodus of subscribers. But guess what? It looks like the gamble might actually be paying off.
Yeah, their subscriber numbers are up, which is great for them. But how sustainable is this strategy, really? It feels like they're playing a dangerous game. Alienate enough people, and those subscription numbers could take a nosedive faster than you can say streaming wars.
Exactly. It's a delicate balance. On the one hand, they've got to find a way to convert those freeloading password sharers into paying customers. That's just business 101. But on the other hand, nobody likes to feel like they're being squeezed, especially when it comes to something as simple as sharing an account with a friend or family member.
It's almost like a social experiment, right? How much are people willing to pay for convenience, and at what point do they just say, forget it, I've got other options?
Precisely. And let's not forget, the streaming landscape is more crowded than ever these days. Consumers have options coming out of their ears. So Netflix might have scored a short-term win, but the long game is far from over.
Speaking of long games and tough competition, did you see that CVS replaced their CEO? That was a pretty big shakeup.
Yeah, not exactly a vote of confidence for the old guard. And their stock took a bit of a tumble because of it. It seems like investors weren't thrilled with the direction things were heading.
It makes you wonder what happens behind the scenes at these big companies, right? What leads to a decision like that?
Sometimes it's about performance, pure and simple. Numbers speak louder than words, and if the numbers aren't there, something's got to give. Other times, it's about a clash of visions for the future. The board might decide they need a new captain to steer the ship, someone who can navigate the choppy waters ahead.
I guess in this case, CVS wasn't meeting the expectations of their investors, and those investors decided to make a change. I feel like we're seeing that more and more these days, activist investors stepping in and demanding change.
You're right, it's a growing trend. Activist investors are like the new sheriffs in town. They're not afraid to shake things up if they feel like a company isn't living up to its potential. They're buying up big chunks of stock, getting themselves board seats and pushing for changes. Sometimes it's about strategy, sometimes it's about leadership. But one thing's for sure, they're a force to be reckoned with.
So we've got companies fighting for survival in the cutthroat world of streaming, activist investors circling like sharks, and let's not forget about those looming elections. It's enough to make your head spin. But amidst all this chaos, there's something comforting about the relative stability of the bond market, right?
You say comforting, I say potentially misleading.
Oh, now you've got my attention. What do you mean? Oh, now you've got my attention. What do you mean?
Well, bonds, they might seem like the quiet ones at the party compared to, the stock market's wild ride. But don't let that fool you. They've got their own drama going on, especially with this election coming up.
Okay, you're right. I always forget about that. So should I be worried? Should investors be heading for the hills, or are there opportunities here?
It's more of a, proceed with cautious optimism kind of situation. Bond yields, they're actually looking pretty good right now, especially if you've been, playing it safe with cash or CDs.
Yeah, those haven't exactly been setting the world on fire.
Right. This could be a good time to, maybe think about locking in some of those higher yields, maybe by, taking a look at longer-term bonds.
Okay, that makes sense. But you've got that cautious optimism thing going on, so there's got to be a catch, right?
You know me too well. The big question mark right now is this election, the 2024 election. It's like a wild card. In elections, well, they don't always play nice with the markets. The bond market's no exception.
Okay, I'm hooked. Break it down for me. How could the election actually impact bond yields?
So historically, when one party manages to sweep both Congress and the White House, a clean sweep, things get interesting, spending-wise. And it seems like no matter who's in charge, we usually see an uptick in government spending in those situations.
Really? Why is that?
Well, sometimes it's about pushing through a specific agenda. Other times it's more about seizing a political moment, striking while the iron's hot. But whatever the reason, more spending usually means a bigger deficit. And a bigger deficit means Uncle Sam needs to borrow more money, which means issuing more bonds.
And when more bonds are issued?
Exactly. Supply and demand, my friend. More bonds on the market increases the supply, which can drive down prices and push those yields up. So investors, they see this coming, they know a spending spree might be on the horizon, so they start demanding higher yields on those longer term bonds to, compensate for that extra risk.
So it's not just about the Fed. We've got to keep an eye on who's running the show in Washington, too.
It's all connected, right? And then on top of all that, you've got global uncertainties, curveballs coming from left field. It's a lot to keep track of.
So much for bonds being the boring investment.
Yeah.
Okay, let's say I'm an investor, and I've been, sitting on the sidelines waiting for the perfect moment to jump into bonds.
Hmm.
What's my move here? Hold off, see what happens with the election.
Yeah.
Or do I try to get ahead of things?
Well, if you're okay with a little risk, a little bit of a gamble, maybe dip your toes in the water now. Like I said, those bond yields are looking pretty good right now. It'd be a shame to miss out completely. But, and this is important, don't go all in on the longest term bonds you can find, all right? Remember what we were just talking about.
Right, election craziness could send those yields through the roof.
Exactly. So maybe think about focusing on the short to intermediate part of the yield curve. It's about finding that sweet spot. You're locking in some decent yields while also minimizing your risk if rates suddenly spike.
So, a balanced approach. Don't put all your eggs in one basket. And don't let those scary election headlines scare you away from bonds entirely.
Exactly. There are opportunities out there. You just got to be smart about it.
Well said. Well, there you have it, everyone. We covered a ton of ground today, from AI chips to Apple's China comeback, a little Netflix drama, a CEO shakeup, and of course, the always interesting bond market. It's been quite a ride.
It has. And hopefully our listeners learned a thing or two.
Me too. And remember, the most important takeaway is this. Stay curious, keep learning, don't be afraid to ask questions. That's how you stay ahead of the game. Until next time, everyone.